if you pull in your time frame to less than a year, less than 12 months, and you consider, regulatory uncertainty and market liquidity crisis, like just about anything can happen. And we just saw an example with the China exodus, with a major shock, which drives a lot of people had to forcibly liquidate their holdings in China. If you look at it, it was a crackdown not just on Bitcoin mining, it's a crackdown on Bitcoin holding and the ownership of it. So you can see things like that, and you can see that ripple through all the leverage in the crypto markets. That's why I think trading it and speculating it are really difficult. What's the most popular monetary asset in the world? The dollar. What's the second? The euro. What's the third? The third is Bitcoin. So of the top three, the only one that's going to go up in value as we print more money is Bitcoin. And then if I want to go find another scarce asset, everything else, Apple stock, Google stock, every other crypto is less popular. So I'm looking at Bitcoin as the most distributed, strongest brand of a monetary asset in the world. So if you're going to actually place a bet on a non-sovereign store of value, the dollar is not it, the euro is not it, Bitcoin is the first thing if we just look at distribution. So in that case, you just take a 10-year time horizon, you say, okay, well, Bitcoin is a digital property, I'll wait 10 years. And if there was one that was more successful, like how did I choose Facebook? Because Facebook was the dominant social network. How did I choose Apple? Because they had the best, most dominant iPhone. How did I choose Google? Pretty obvious, right? I didn't choose them when they were 5% of the market. I chose them when they were 40, 50, 60% of the market, but they'd only penetrated 2, 3% of where they're going to be. I think in terms of, addressing the issue, is Bitcoin a monetary or an inflation hedge head on? Well, I mean, when I'm looking at numbers, you take the 10-year view, and the 10-year average, growth rate of Bitcoin is 116%, and gold is 1.6%. So it's pretty clear that gold is not serving as an inflation hedge in the past decade compared to Bitcoin. If I take the 10-year numbers for the S&P, it's 12.34% right now. If I take NASDAQ, it's 18%. Obviously, big tech is doing better than S&P. S&P is doing better than gold. Bitcoin is doing better than them all. If I look at the last 12 months, we dumped a lot of liquidity in the market. So what happens? Well, gold is down 1%. The money passed gold. S&P is up 39%. People piled into the S&P index as a store of value. NASDAQ is up 44%. The long bonds are down 11%. Bitcoin's up 277%. Okay, so if I'm looking at those numbers, the story it's telling me is that in an environment where you're printing a lot of liquidity, either over the near term or the long term, people are choosing big tech, then they're choosing equity, and they're choosing crypto overall. Now I focus on Bitcoin because I see Bitcoin as the risk-off crypto asset, right? It's like the sovereign, if you're looking for the long bond or the sovereign debt of crypto, I mean, it is the most risk-off asset. Ethereum and some of the other ones, they can show higher gains from period to period, but there's more risk in them. It's not hating on them. It's just risk on, risk off. Let's come back to this issue of portfolio theory. You've got an asset side of your balance sheet and a liability side of your balance sheet. So if you're a saver, then you put 90% of your money into hard assets, which means you put it into Bitcoin or you put it into something else, property or trophy collectibles or real estate, and you're waiting a decade. If you're on your liability side, you can do that with equity. You just take all the money you have and you buy a mixture of those strong assets. Or if you look what I did at MicroStrategy, so I borrowed money between 5 and 7 years out at a blended interest rate of less than 1%. And I then bought a strong asset, which I thought would go up in value more than 1%. It's kind of a simple idea.
Yeah.
Now, That's a saver's mentality, long dated debt. I mean, the best debt, by the way, is 30-year mortgage on your house at 2.5% interest, or a 10 to 15-year mortgage. So in the ideal world, you take long debt that's 2, 3, 4%, and then you take long duration assets. And then if Bitcoin is going to go up 20% and my debt is going to be 2%, I have an 18% arbitrage. I just wait and I win. That's one idea. The other idea is the other extreme. I'm a speculator. I basically buy yo-yo coin at 20-to-1 leverage on Saturday afternoon. And then it trades up and I take all my winnings, I quintuple my money, and then I bet that at 20-to-1 on Yi coin, right? And that's also using leverage to trade in crypto, but you see the two extremes. In one case, you can make a fortune in 5 minutes or you can be wiped out. In the other case, I made a fortune on Google. I made a fortune on, if you define a fortune as buying a super yacht, I made a fortune on Google. I made a fortune on Facebook. I made a fortune on Amazon. I made many fortunes on Amazon. I made many fortunes on Apple. I remember that Amazon traded down 80%, but I don't remember when. I remember that once I tried to trade an option bought a call option for 12 months or 18 months on Apple, and I lost money on it. I don't remember when. I remember there's volatility in Facebook and Google. I don't remember when. And the point of all that is, if you had a 10-year time horizon and you just remember that, Google, Facebook, Amazon, Apple, good, and if you weren't going to get wiped out or get a collateral call based upon a mark to market, you wouldn't have had to pick up the paper. It wouldn't have. There's like, is Amazon going to get unionized? Is Apple a monopoly? Will the Chinese cut off the Apple supply? What'll happen with Google? Oh yeah, there's the CEO of Google is getting pushed out. All these things give you anxiety. But at the end of the day, if you're a speculator, that's anxiety. If you're a trader, you got to guess, will they beat their earnings estimate when they report their quarterly results? Like everybody said about Apple. And I was like, you guys are idiots. It's like, it's Apple. It's a monopoly. What does it matter whether they beat or don't beat? Or, the iPhone forecast for China is like up 5%.